Hey everybody, what's up? What's today? Thursday, September 6th. Couple of announcements before I begin. First of all, tomorrow we will have the U.S. jobs report. I will be sending out my forecast. And by the way, my forecast for these jobs numbers, for the payroll number, it has beaten all of the mainstream economic forecasts. I mean, month after month after month. The thing that I get way more often than anybody else is the magnitude either above or below the consensus forecast. And that's what matters. I mean, there's the consensus forecast, what I give you, and where my forecast is usually really spot on is in telling you, hey, this is going to be much weaker or it's going to be much stronger. And that deviation is what's important, because that's what really drives short-term movements in the market. Long-term movement, we understand because it's all based on policy, and we understand policy and the effect of policy as a result of having knowledge of MMT. So that doesn't change. But if you want to make money in the short term, like as a day trade, as a quick trade off of these numbers, my forecast, it gives you the degree of magnitude above or below the consensus. And again, that is what drives the short-term move. If it's a big surprise, you're going to get a big short-term move. If it's right in line, well, then the market has pretty much discounted it. So I will be sending out that email. If you want to receive that email, and if you were not on the email list, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. I will send you that. By the way, if you sign up or you can sign up for a 30-day free trial of zombie trading, I will also send you that because it will affect Forex positions. And zombie trading, that is my Forex, daily Forex signal service. What do we do there? We front run the zombies because we know how they're going to behave. So we front run the zombies, we take their money, and we get out before they die. Excuse me. All right, so we have that. Earlier today, I sent out my analysis, as I always do every week, of the EIA Weekly Petroleum Status Report that the Energy Information Administration puts out. So if you want to have an idea of what is happening and what the oil market looks like fundamentally. And by the way, that report, as I say many times, it's not just about the inventories. I mean, you get an inventory number that pops up and everybody goes crazy. Maybe some of the zombies who think they're a little bit smarter, they might not just look at crude oil inventories, they might look at gasoline inventories or distillate inventories. There's a lot of information in that report. There's information on demand. There's information on production. There's information on imports. There's information on exports. I mean, it is a very, very big report, and you have to know how to synthesize that information, and nobody has a better track record when it comes to oil than myself. Ask anybody. So if you want that, again, go to my website, pitbulleconomics.com, and sign up for either 30-day free trial of MMT Trader or a 30-day free trial of zombie trading. Oil prices affect certain currencies, one of them being the Canadian dollar, so we have plays or strategies off of that, all right? So that's it for that. Let's talk a little bit about some of the economic data yesterday. Very interesting, and I forecast this. I sent it out prior to the release of this number yesterday. Was the July U.S. trade balance, the trade deficit. The deficit expanded by the largest amount in 3 years. It put the current deficit of goods and services at the worst level since February. Now that's a July number, so that incorporates at least some of the tariffs. The tariffs were enacted on July 6th. So what we have seen so far, and admittedly it is early, it wasn't even a full month because July 6th was when the tariffs started, but we have seen a significant worsening in the deficit. Now, the trade deficit. Now, that doesn't even take into account what happened in August when we've seen a very, very substantial decline in petroleum exports and crude oil exports. So that has yet to be factored into the trade balance. We're going to get those numbers next month when we see the August numbers, and probably as we move out farther and get more of this data, we're going to see the negative impact to the United States. Now, everybody thinks, oh, the United States is the beneficiary of tariffs and sanctions. Everybody else is getting hit, right? If you see the reaction so far that has played out in the markets, specifically in Forex markets and commodity markets, where there's been a lot of selling of currencies, of foreign currencies. There's been a lot of selling of commodities and gold based on some belief that, well, it's only going to affect these countries that are being targeted with the tariffs. What you don't understand is there are retaliatory tariffs being enacted too. China cut down, maybe eliminated even, imports of U.S. oil. And that is a factor in the widening of the U.S. trade balance. It is certainly a factor in the steep, steep drop in U.S. petroleum exports. So don't think this is a one-way street, as the markets have sort of painted it right now, like, oh, this is all to the benefit of the United States. Maybe at some point way, way long-term down the road, it starts to have a positive effect in that we see domestic production expand, less reliance on imports, the trade deficit starts to fall. But the short-term to the intermediate-term impact is a widening of that deficit. Not to mention the fact that it is inflationary. And again, I go back to the point that I've been making for many, many months, which is that inflation is not bullish for a currency. Yet that is the argument being displayed right now in the Forex market. Oh yeah, inflation. Oh, that's great. It's going to boost the dollar. It's not going to boost the dollar. If inflation was great for a currency, you'd see the Argentinian peso and the Turkish lira and the Zimbabwe currency. They'd be and the Ukrainian currency. They'd be the strongest currencies in the world. By the way, Ukraine just raised its interest rate again, and the currency's crashing. Argentina last week raised its interest rate. What? I think it's 60%, the highest in the world, and currency is crashing. So if rate hikes were so bullish, and again, I've used the example for the dollar. People might say, well, you can't equate those countries. They're totally different than the United States. And yes, that's a valid point to an extent, but we've had 7 rate hikes, and the dollar index went from 104 to where it is now at 95, and actually it was lower than that. We have seen the effect, okay, of the rate hikes, which has been bearish for the dollar. And speaking of the dollar, I sent out an email today to subscribers, a kind of a humorous email, I would say, from a very popular Forex blog that I follow. The guy who writes it, savvy guy, I have to say. But again, posts up a picture, a cartoon of the U.S. dollar with, has George Washington on there with a muscular pose, muscles popping out all over the place, depicting what? That is a metaphor for the muscular, powerful king dollar, right? George Washington was like a bodybuilder. Pictures are worth 1,000 words, right? I went back and I looked. Same picture, practically. The muscular dollar, George Washington with his arms folded like that, muscles popping out of everywhere, his arms, his chest, on the cover of The Economist magazine in December of 2016, which, by the way, coincided with the top of the dollar index. It was 103 and change. It went on to trade down to 88. Beautiful example. I mean, when things start to get expressed like this, in these metaphors, muscles popping out, the dollar, oh yeah. You got to pay attention to that. It's very, very interesting. I mean, those sorts of commentaries are a snapshot on the mentality, the psychology, the psyche of the market right now. Dollars strong, brawny, bodybuilder, powerful, that's it, nobody. King dollar, king, crown, everything, muscles popping out everywhere. Let's go back, we'll go back and we'll revisit that, just like we're revisiting right now that Economist magazine front cover. We'll go back, I'll pull up that this always happens, every single time. I sent out last week to my subscribers how, what was it? I don't know, back in July or something like that, I forget. Jim Cramer sent out an email telling his people, his subscribers, his followers, raise cash. Maybe it was April, May, I don't remember. I got it. Raise cash. It was at the bottom of the whole correction. Raise cash now. Don't fight me on this, he said. Raise cash. What was I doing? I was saying, buy the stock market. This is it. Too much fiscal stimulus. The economy is going to be very, very strong. And look at what they're predicting, 4.7, 4.5% third quarter GDP growth. So there you have it, folks. There you have it. All right, so remember, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of either MMT Trader or Zombie Trading, and you will get the email on my forecast for tomorrow's jobs report. See you, everybody. Bye-bye.